Welcome to Passive Investors Playbook. I'm your host, Charlie Hardage. In each episode, we'll sit down with successful people that turn to real estate to build and grow their wealth. We do a deep dive into why they chose real estate and what makes it so attractive to them. We explore why people in their industry could also benefit from passively investing in real estate. Whether you're a beginner or an experienced investor, a doctor or a professional athlete, love your job or hate your job, our show is here to help you build a profitable real estate portfolio while maximizing your free time and minimizing stress. So sit back, relax, and get ready to learn from some of the best in the business. Welcome to Passive Investors Playbook. Thank you for tuning in today. My name is Charlie Hardage, and I'm the host of the Passive Investors Playbook. Our show is focused on people that were successful prior to getting into real estate. Today, I have the pleasure and honor of speaking with a good friend, Stephen Lee Thomas. Stephen was born in California and built a successful career as a director of operations at a Fortune 25 company with an annual revenue of over $120 billion before he discovered commercial real estate. Since early 2018, he has invested as a passive investor in 7 multifamily apartment complexes with a total of 1,600 units valued at around $100 million. In 2021, Stephen became a full-time active general partner overseeing the company's financial forecasting, property acquisition, and property management of its assets. To date, the company portfolio has acquired over 19 multifamily apartment complexes in a little under 8 years. The total combined value is over $250 million, and 8 of those deals have gone full cycle. Stephen and his partners have successfully raised over $70 million in total capital, and they've been able to return an ROI of 80 to 100%. Their average IRR is 35% to their investors in just 2 to 3 years. Passively investing has made a huge impact on Stephen and his family, and I'm very glad that he is here with us today. Stephen, thank you so much for being here. I really appreciate your time. Do you mind telling the listeners a little bit more about yourself?
Sure. Yeah, absolutely. Thanks for having me, Charlie. I think your description there is pretty spot on. Like as you mentioned, I started my corporate career quite 15 years ago, and had the opportunity to get started with a company. It was a Fortune 500, but barely. And then within about 10 years, they moved up to in a Fortune 25 spot. So you mentioned a little over 100 billion. Last I checked, I think their annual revenue last year was $140 billion in revenue. So I've gotten to see quite a bit of growth. I've seen some pretty cool things with an organization. I've also experienced some very stressful moments, which a lot of that led me to real estate investing, which is what we're here to talk about today. So at a high level, yeah, I started passive investing as a way to diversify and really find some freedom in my life and my career, because along with that trajectory of the organization and my personal growth in the organization came a lot of stress, and I needed to find some balance in that. So I'll leave that right there and kind of leave it as a cliffhanger, and we'll share a little bit more about those details as we get a little further through the interview.
Man, that's awesome. Okay, so you started with the company, barely Fortune 500, and as the director of operations, you took them to a Fortune 25, is what you're saying?
Well, I don't know if I can claim all of the credit, right?
Just most of it.
Yeah, it's a large organization, so it's really interesting. When I started, so before that, when I was working in IT. Okay. So I had an IT background and working for a software company, small mom and pop kind of a thing, maybe 30 employees total. And I left that organization. I went over into healthcare and in IT. And went from being a manager over to an analyst. I just needed something different, but I needed more opportunity for growth. Fast forward a number of years within that organization, and I had moved on to be a director, and my department I was responsible for was as large, probably larger than the software company that I came from, right? So I was overseeing probably about 40 people there. And being part of operations or multiple divisions, I was part of the pharmacy division. But we had to do a lot of growth. Our primary clients were the states, working at like the Medicaid level, Medicare level. And so everything was very, very, very prescriptive. And so that's one of the things I learned, is that you have to follow things, but scale. We had to be able to scale. So everything was about how quickly, how efficiently can you operationalize and scale. And so and I learned while the training they had was to focus on your teams, because me as a leader, 100% of my success is to find how well my team performs. Right. So take that and apply it to the team. And the more successful you can have your team, the more successful you as an individual are, right, for that team. And then the more it supports the organization. So overall, a lot of people were working on that, moving in the direction. I was a piece of that, but I had the opportunity to help make a pretty big difference on multiple multi-billion-dollar projects.
Wow.
That were implemented to support that effort.
That's amazing. So you did mention diversify, stress, balance. I know you were kind of going, it was probably very, very stressful for you. Had you already invested in real estate before you started getting into apartments, or what kind of led you to apartments?
Yeah, it's an interesting journey. I think my journey is probably similar to a lot of people. But I was able to kind of fold in a little bit about what I was learning from my corporate background of scaling and leveraging other people's time, right? So, my upbringing is very normal, middle class. Neither of my parents had college degrees. When I was little, my dad went back to school, got an AA. And there's definitely times I remember seeing them struggle. And so, but they always worked hard. That was a value they really instilled with me. But I always kind of had this ambition of I want some financial stability.
Mhm.
And growing up, very traditional, you go to school, you work hard, you get a job, you hopefully find a job that's got a 401k, hopefully they do some matching.
Yep.
And how do you diversify? Maybe some stocks, right? There's just not a lot of options out there in traditionally investment strategies. So the idea is you work your way and you save your way into retirement, right? So, growing up as a kid, like I said, I just a normal kid, but my parents, anything I wanted, I had to work for, right? My first pair of rollerblades, my parents handed me the church phone book and said, call people up, see what kind of work they need done, right? I was mowing lawns, but washing cars, it didn't matter, but I had to earn my keep. I had to, everything I
Yeah.
did. So I was always working hard. My first job, my first real job was when I was 15. So I've always been out there working. And did the traditional route, went to college. College was it was a lot of fun. Not maybe a strong suit of mine, but it was a lot of fun. I eventually graduated from college. I had almost enough units for 2 degrees, but I've only got one. So I got to try a lot of things out, which was fun. But where that lead me, it led me to a corporate career, which was, that's part of the training, get up, go to school, get a job. I had made it, right? Corporate career. So I'm climbing this corporate ladder. I'm working really hard. And here's what I find out along the way. You work really hard, you get a promotion, you get more responsibility, and you get more stress.
Mhm.
And you get 15, maybe 20% pay raise. How many times can you do that? You just keep getting more and more responsibility, which is cool. But going back to part of this journey with organization, the amount of growth they had, it was very stressful. The projects we had were huge. Like I said, they're multi-billion-dollar projects. Well, overseeing operations, I had to make sure things were being done. And so there's this moment that I remember, there's this pivotal moment that I remember it was early morning. I only had one child at that time. My mother-in-law was there in the morning helping out. It was before work started, before my son had started going to daycare. I'm sitting there at the kitchen table. I'm giving a status report like at 7 in the morning, right? Because so we've got people across the United States. So it's 7 in the morning before normal working hours. I think my son's crying. He's sitting in the high chair. My mother-in-law, bless her heart, she doesn't always speak quietly, making breakfast, talking. My wife's there, and I'm literally giving a status report. And one of the senior VPs says, "Hey, there's a lot of noise going on right now." And I'm sorry, that's me. That's just, the background noise. And I'm thinking to myself, this is gonna kill me, right? Like I'm working so hard to get up early, put everything forward. This is gonna kill me. I'm gonna work myself to death. There's gotta be a smarter way to do this. So real estate. Real estate's a fantastic option, but Charlie, I've got a new family, right? And I'm working hard. Where the hell am I going to find time to get into real estate, right? There's single family homes, but then I got to go find the house. Maybe I flip the house. I don't have time for that. So I ended up finding out about this concept of passive investing in real estate. So within a few months, I hopped on a plane and I flew out to this group. I didn't know anybody, but I said, I'm going to do it. Like, I have to take some action. I've got to do
Yeah.
something different because I cannot sustain what I'm doing right now. It's gonna kill me, and I don't have the freedom. I'm trying to climb this corporate ladder and get more money, but I don't have any more freedom. No more freedom. I had no more time. I had no more freedom. I had more stress, more responsibility. I was making money, but am I gonna get to enjoy that money at some point? Right? Something has to change. So I went out and I did this weekend and met with a bunch of people who do multifamily syndications, right? So they go and they find large apartment complexes, they purchase them, and they allow people to invest passively alongside of them. And I rolled the dice. I said, I'm going to take a risk here. And I mean, I had educated myself a little bit, but the only way to move forward on some of these things that's not traditional is you just have to make a decision. You've got to go with it, right?
Yep.
So I took massive action. I went in that direction. Okay. So this was, I remember this was in November of 2017. Okay. So I came back, told my wife, and she said, cool, that's great. You got a family you got to take care of. I hope this works out. I said, I hope it does too. And about 30 days later, about a month later, I got a call from one of my older sisters. And she said, hey, your oldest sister, Tori, she just died.
Oh, no.
She was 8 years older than me. And so I had made this decision. I want to do this for me and my family, right? I'm trying to get more freedom back. Well, the story with my oldest sister, she had gone through this really ugly divorce. And the father was estranged. And when she passed away, she left 2 kids, no savings. She hadn't worked for a few years. And it just really hit home, right? Like, I'm trying to do this for my family, but I had made this decision. I'm going to do this. But I realized in that moment, it's more than just about me, right?
Yeah.
If I can figure this out for me, I can help out my sister's family, right? But it doesn't stop there. Like, how many other people could possibly take advantage of this? Okay. So my wife was also pregnant at the time with my second. So got a lot of irons in the fire right now, right? I got busy with the corporate career. I'm starting a new family. I've doing this real estate. Well, I want to do this real estate thing. It's only 30 days in. Well, in early 2018, I made my first passive investment. My daughter was born. And within a few months after that, I got my first check in the mail. So within about a year from that, sitting at the table moment of like, man, this is chaos. Like, what am I going to do? I just did a lot of things. I just had to move in a direction. I made that decision, and then I started getting paychecks in the mail. So I was to the point where I was changing diapers, getting paychecks in the mail.
That's awesome.
And that was like, that's my aha moment right there. I'm like, oh my gosh, like, okay, this is it. Like, if I can take this and I can keep doing this over and over and over, that's how I'm really going to get freedom, right? It's not going to be working myself to death. It's going to be leveraging other people's time, other people's money so that I can have my freedom. And I think for me, I think that's the message here. Passive investing, a lot of people like, how much money can I make? How much time can you get
Yep.
from passive investing? Because we all have a timer. We don't know when that timer is going to be up. But I guarantee you, Charlie, if you go to somebody on their deathbed, no one's going to say, hey, I wish I had more money. If there's one thing I could have done different in my life, I wish I had more money. Almost everybody's going to say, I wish I had more time. Right.
Yep.
And so I think that's where the opportunity is here with passive investing. And that's where I'm at. I'm able to spend more time with my family. I'm able to have less stress because I'm not chasing, right, climbing up that ladder anymore. And now the opportunity is, how many other people can I help have that same experience? How many other people can I help achieve financial freedom?
Man, that was amazing. That was awesome. I wrote so much down, and I'd love to recap that for the listeners and viewers. That was awesome. Thank you.
Absolutely.
All right. So you got your work was very busy. You were growing
Yes.
quickly. You're very stressed. You did not have balance. You had work balance, no work-life balance.
Yes.
And you wanted something where you could have financial stability because you knew you didn't want to have that work balance, and you wanted to be able to get some time back. And so you knew that there was a smarter way to do this. You just probably at the time didn't know what that was.
I didn't know what it was.
Yeah.
I just had to, there's got to be something better than what I'm doing. Yes.
Yeah. By the way, so far, this is all my story as well. I grew up middle class mindset, knew what I was doing, going to school, getting a job, putting money in retirement wasn't going to work for me. I knew I wanted something else. I just didn't know what that was. And you wanted to, you use the word sustain. And I like that because the company is called Sustainable.
Yep. Sustainable capital investments. That's correct.
Yep. So I love that you use that, and it totally makes sense. And you tied that back nicely. So you knew there was a smarter way to do this. You just didn't know what that was. You realized that you had to go for something and kind of take a risk, take a jump on something that is not traditional. It's not a 401k. It's not stocks. It's not the, being a landlord of a single family home. It is something that you probably, and I don't want to speak for your wife, but if she's like my wife, probably a little timid at first, and is like, I love you, go after it, but don't include me.
Yes, I love you. I trust you. Don't put all of our money in it, please.
Yeah.
Yes.
So you decided, you found a multifamily syndication group. You took massive action, which is phenomenal. I think that's where, to be honest, that's where I struggled with for years, is taking the action. I had a ton of education. I didn't take the action. And within a year, you went through, you're still extremely busy with your job. You have a young family at the time, your wife's pregnant, and then your sister passed away. And so you realize it's not just me, it's not just my immediate family, it's nephews, it's other family members.
Yeah.
And so you started investing, changing diapers, getting checks, which is, probably enough to pay for the diapers for a year because they're expensive.
Absolutely, yes. Yeah. Paid for diapers for sure. All the diapers we ever needed. Yes.
Yep. And then you realize it's not just for you, and it's for your family. But then you realize it's not just for my family. It's to help other people that maybe kind of grew up like you and I did, Stephen, that middle class mindset, or didn't know what else is out there. And so I love that story. And then the last thing you said, it's not necessarily about how much money you make, it's about how much time you can get back. And I love that, because I know when I had first heard about multifamily syndication years ago, I was like, hold on, like I don't want to travel to this place. I don't want to go and do this. I knew what passive meant, right? Passive is you don't do anything, but um there were, what's the hook, right? Is this a scam? And after talking to people that I knew well and trusted, there was no scam. It was, you invest with us passively, you put your money in, and then they did all the work for me. I didn't have to go to the property. You obviously, because it was my money, I did my due diligence. I checked over the team, their track record, their underwriting, and different things like that. But at the end of the day, I'm not setting foot on the property. I've never spoken to those property management companies, never spoken to any vendors, and so you kind of found a way to, even if I'm not saying you don't love your job, but you found a way as kind of like a fallback plan. You mentioned financial stability, getting some time back, so you're able to have your money work for you instead of you working for your money. So you're able to grow your income, your financial outlook, and I love that. All of that resonated with me. So that was phenomenal.
And I think it's like you said, Charlie. I mean, so much of that is that this is life,
Yeah,
right? I mean, this is life. Life was full of roller coaster moments. And if you don't slow down and enjoy the moment, you miss life,
yeah,
right? You've got to enjoy the journey. And traditionally we're taught to be in pursuit of something.
yeah,
Sometimes you just gotta slow down, but you gotta have enough stability that you're comfortable slowing down.
right,
And that's where I'll go back to, I think that people need to understand that financial freedom is not, I've got $1 billion right in my savings account. It's you've got a way where you've got cash flow coming in so that you can do the things that you want to do. You can spend time with the people you want to spend time with, right? And
right.
that's what it's all about there.
Yeah,
Um,
love that.
yeah.
So the real estate passively investing, that was obviously attractive to you because you were able to continue growing your money, building wealth, but not spending more time doing anything. So it's like an extra, kind of like working overtime without actually having to work overtime.
Yeah,
But
I mean,
then,
just like what you mentioned, sorry to cut you off, but just like what you mentioned, any of the passive investments I've ever done in the 1,800 units I think I'm up to now, I've never been to the property.
yeah,
I make
love that.
zero decisions on what happens there, right? Like you said, you need to vet the deal sponsors. Um, but the money just comes, and you have to understand that there's an ebb and flow to the market cycles.
Yep.
But to your point, yes, it is passive. It is truly 100% passive. I get a newsletter, I get financial statements. I don't have to look at those if I don't want to,
Right.
right? It's as much time as I want to put into it, which for me, I didn't have the time. And so 100% agree with you on that. It's passive investing can truly be passive. And let me add one little component to that. If I ever had a question, I can actually reach out to the deal sponsor.
Yeah.
I can call them, right? Try doing that with your 401. You got questions about what's going on with your 401k? Who are
Good
you going
luck.
to talk to? I need to know what's going on. What's your business plan here to help, raise the value of the stock? It doesn't work like that, right?
Right.
So not only is it truly passive, but you can actually build a relationship with those individuals who are managing that asset, which is something that you just can't do with your traditional, retirement investment models.
I love that analogy because there's so many components to that. You go to your financial planner, maybe they are handpicking it, but it's likely some type of robot or some type of algorithm that they're using. And then on top of that, they're going to fund managers. Good luck talking to a
Yeah.
fund manager or the guy that programmed the algorithm. You could talk to your financial planner, but they're not going to give you the inside scoop. But I know I personally love talking to my investors because number one, builds that relationship. They worked very hard for their money, and so the last thing I want to do is ghost them or be coy with them. I want to give them the update, what's going on with the property, but besides just the monthly email that we send out. And some investors I talk to, every couple weeks or every month or so, and then sometimes it's every few months. It really kind of depends on questions they may have, or different things like that. I always, if there's any big changes, love to update them on that too, even if they're not necessarily expecting that, because I personally think communication is huge key in a lot of things, but especially in an investment like this, like what we do is huge. So what I love about real estate, and you mentioned it even when you were passively investing, is you're able to scale, but you're able to leverage other people's time. And what's great about getting into syndications is it's not one person doing this. It is, depending on the deal and the property, maybe 3 or 4 people, maybe 10 or 12 people. And everyone has different, expertise, different, skill sets that they bring, and the team works together. So the property manager doesn't have to call you, right? Because maybe that's not your skill sets. It's not my skill set.
Right.
And so they go to the asset managers, but I'm able to help underwrite, which is, I know is what you do as well. And so anyway, I love that kind of your background on why you got into real estate, why it's so attractive. And then also that you are trying to give back to others, because what we do, pretty much everyone has heard of a 401k IRA, tons of marketing behind that, right? Different companies pitch that. There's not many companies, and I'm in this space, you're in this space. There's not many big name companies that actually do multifamily syndication. And so the marketing budget behind it, is coming from me. It's coming from you, just kind of getting the word out. And I know you are doing, you and your company are doing a couple different things that are amazing. And I'm very, maybe I'll use the word jealous, but I'm very impressed that you guys are doing, and I'll let you talk, but it's a local meetup, I think, and then a webinar. Is that correct?
Yeah, so we have a couple of different things going on from that standpoint. So I do have a local meetup, free educational meetup.
Okay.
Try to run that about once a month, maybe once every other month. I've got a lot of irons in the fire, but definitely keeping that going. And then my partners and I, we also host a monthly webinar. It's an educational webinar. It's free to join. We post the recordings of those on our website. Actually, the upcoming webinar, which at the time of this recording is going to be next week. So it'll be after the fact when it gets published, but we're going to do a case study of
cool.
a recent property that went full cycle, 88% return on investment in 2.5 years.
Holy cow.
So despite all the things that are going on in the market, right, that's fantastic return. So but those are the things that we want to share, right, and get that out for people to understand and be aware of, and start educating themselves so that they can have that opportunity as well. Because I mean, you've seen it, I've seen it, the opportunity that's out there, along with the tax advantages.
Yeah.
Traditional 401k and Roth, they don't really hold a candle to it. It just,
Right.
people need to be aware of it.
Yeah. That's awesome. And where is your meetup? I know you're in California. What part of California?
I'm in Central California, so I'm in Fresno specifically, but
Okay.
my meetup is the Central California Apartment Investors meetup.
Okay.
And so that's open for anyone to join or attend. And then the webinar we do is through Sustainable Capital Investments. And we do that typically the second or third Wednesday of every month at 12 Pacific, 2 Central.
Okay, very cool. And we'll put, I know we're not near the end of the interview, but we'll put all that in the show notes as well. That way, if people want to learn about you, your company, and meetups, webinars, all that, we'll make sure people have access to that. What would you say that your company goals are for the next few years?
So I'm going to put it in terms of probably like the next 3 to 5 years. So you mentioned we're at about $250 million. in acquisitions. So definitely the next 3 to 5 years. So 3 years, probably about another $250 million, 5 years, $500 million. And then hopefully we can scale exponentially from that point would be the goal. But I want to say that a little bit different, right? So that's great. You're gonna grow a portfolio, but in the context of passive investing in returns, if I say that back a little bit different, here's my plan. For anybody that wants to be a passive investor, my goal, I'm going to try to give back $150 million to passive investors in the next 5 years. That's the
amazing.
goal. That's what we're shooting for with our organization in the next 5 years.
That's amazing. Is that like in a briefcase, you hand deliver it, or how's that work?
Yeah, it's right. It's right here.
Yeah,
No,
yeah,
so, and I don't know how much you've gotten into this with some of your other podcasts. The returns on there's two components to it. There's a cash flow component and there's a
yep,
capital gain component. So most of the deals will cash flow somewhere between 6 and 8% annually, and then the total return on that is somewhere between 80 and 100% return. The internal rate of return, or if you were to average out the return over time, it's, I think you had mentioned what 32%, 33% average annual return,
yeah,
which is a pretty phenomenal. So you take the cash flow and then you take the capital gain, right? We underwrite for 5 years. Generally, you can implement your business plan a little bit quicker than that, somewhere in that 2 to 3 year time frame. And that's how you're essentially able to double your money every 2 to 3 years.
Man, that's amazing. I actually pulled up a calculator. It's 35.2%
Okay.
Is what your team is. That's not the best deal. That's the average, right?
That's the average. That's average across the portfolio. Yeah.
Yeah, that's phenomenal. And I love that you said $150 million is what you're going to give back to passive investors over the next few years. That's phenomenal. Okay, and then I know you're going to continue the meetup webinar series, probably at least for the foreseeable future. You
Yeah,
imagine?
absolutely. We've also we've got a course we're going to offer for free.
Cool.
A multifamily accelerator course, educational course we're going to offer for free. We've got some other documentation, the 4 pillars of multifamily acquisition, also available, right? We're huge on education.
Yeah.
So we're going to continue to educate as many folks as we can for the foreseeable future. And part of the staffing growth that I mentioned is to hopefully start providing some additional video education as well for
Cool.
folks.
Man, that's amazing. You guys are killing it over there. Kudos.
I appreciate that. I'll go back to the it's a team effort, right?
Yeah.
It's team sport. And the alignment with the right individuals, and when you're all rowing the boat in the same direction, that's when you get those synergies. That's when some cool things happen.
Yeah. And Stephen, I know I mentioned this to you a few months ago, but just for the listeners and viewers, I had initially met Stephen, I don't know, 2+ years ago, just on a Zoom call. And I feel like a lot of people, I may catch some slack for this, but a lot of people want to have a meeting just to see how can you help me, right? And I think what really set Stephen and a couple other people apart were the fact that I asked him questions, in our 30-minute call, it went an hour because he was just so giving and just wanted to educate, wanted to, real estate syndications had a huge impact on him, and he was totally okay with sharing that with me and probably the world. But I know I mentioned this to you, Stephen, a while ago, but I really appreciate how much information you gave me on kind of the 4 pillars, and just how can I get into a deal, what to look for, different things like that. And even to this day, I still kind of think back to our initial conversation, and we've spoken many times since, but still think to that one, just, there's people that just want to help. And you and your team are those people that just want to help, want to educate. this business, another reason I love this business, because it is a team sport. There's this abundance mindset, right? It's not like me versus you, it's me and you, right? We don't
Right.
have to do a
Right.
deal together to help each other, right? And there's a lot of people, you're definitely one of them, that will, help, as even if it doesn't benefit you directly, doesn't benefit your company. Steven's a phenomenal resource to reach out to, even if you just want to say hi and kind of maybe get another opinion on syndication. So anyway, wanted to say that, didn't want to forget about that while I was thinking about it. But anyway,
Yeah,
thank you.
I didn't even think, when we were meeting originally, I didn't even think twice about it. I you get a lot when you give. That's one of the
Yeah,
things I've learned. You actually get a lot back when you give. I think it's more fulfilling when you help share your journey, right? I think we're all best suited to help the person that we used to be.
yeah,
And
love that.
as we take advantage of that opportunity, you get a lot of fulfillment. And so yes, absolutely. I'm happy to help people out. Personal growth, I think is probably the biggest part of our journeys here.
Yeah,
And if I can help somebody grow, absolutely, I'm going to help somebody out.
that's awesome. Okay, so how do you think that your previous, or I'm sorry, your current profession has helped you in real estate with the being on the syndication team and the role that you do? How do you think that has helped you?
Um, Corporate governance, there's a lot of structure. You don't go, I mean, it's a huge accomplishment to be Fortune 500. To
Yeah,
go from a Fortune 450, whatever they were, to a Fortune 25 in 10 years, that's no small feat. There's a lot of things that organization has done right. One of those is education, making sure that your team is well supported, training, um, just and structure. As far as you've got to learn how to be scalable, right? You've got to learn how to be scalable. You cannot grow if you're not scalable.
right.
So a lot of the structure has been very, very, very helpful for me. I've also been in very high pressure situations, very difficult conversations, and being a syndicator. I'm not gonna lie, it's not all rainbows and unicorns, right? There's things happen at a property. Do you let it stress you out, or do you deal with it, right? Because it's something you got to deal with. So I've just been through so many things and lots of corporate structure. I lean on it frequently to bring that value to the team, right? To bring the structure, bring the scalability, bring the focus and the emphasis on growing your team, uh, to the rest of the group, and applying that to real estate as well.
That's awesome. What would you say to one of your colleagues? You know, maybe there's some hesitation to invest because it's not traditional. What would you say to one of your colleagues, maybe not entice them to invest, but kind of share the word, share the fact that, hey, there's other non-traditional routes that you can take?
Um, Good question. And I actually I actually have if anybody's interested, I'm happy to have that exact conversation with you. But a lot of it goes to the story we were talking about earlier, right? So you have to have the
Yeah,
conversation. Where are you at financially? What are your goals financially? How are you going to get there? And then I like to ask the question, do you know how old you're going to be when you're going to retire?
yeah,
Do you know how much money you're going to have when you retire? Most of the time people can answer that question, right? They say, well, I'm going to work until I'm 65. Well, where are you going to be when you're 65? I don't know, but that's how long I'm going to work.
yeah,
So then what I can do, right? Because we've got a track record as an organization, here's what this looks like. If I could share this with you, and you could look at these numbers and you could bake this in with where you're at, what you could potentially invest now, could you then come up with a plan to know how much money you would need to retire and at what age you'd be able to retire, right?
yeah,
And then all of a sudden it's like, oh yeah, that makes a lot of sense, right? And most people, they don't have the time to invest in real estate. But once again, going back to earlier question, so they're familiar only with traditional investment vehicles,
Yep.
but they know real estate's a good option. So if you look at, you can blend, I can be an investor, I can take advantage of real estate, but I don't have to do any of the work. And you get the opportunity to understand some of the mechanics and some of the numbers. And I can share with someone how the business plan works, how you can actually force appreciation. Then you just start seeing some light bulbs flicker. I get to help people have some of those aha moments, right?
Yeah.
That's a really cool thing. So I think the moral of the story is you don't have to invest in that first deal, but nothing's going to happen if you don't do anything. You've got to make a
Right.
decision to move in a different direction. It starts with a conversation, whether it's with me, whether it's with you, or whether it's another syndicator. You've got to ask those questions. And then, like me, and I'm sure like you, Charlie, maybe that first investment, you don't go all in, right? You dip your toe in the water, you do an investment, but then what happens is you start to see the fruits of that, and you say, wow, okay, all right, maybe I'm onto something here. Most people, when we do investments, somebody will invest $50,000, and then it goes up from there.
Yeah.
To even one of the most recent investments. I saw someone, one of my partners, who's been doing this for quite a while, somebody invested $1 million.
Wow.
And that says a lot, right? So,
Yeah.
I mean, that's no small amount of money. But it goes back to take massive action, even if it's just the decision to have a conversation, right? Don't shy away from it. What do you have to lose from having a conversation and learning a little bit more about how it works?
Yeah. I love that. And something that I did when I first got started was I went to several webinars before I invested.
Mm-hmm.
And it wasn't that I didn't trust I purposely wanted to educate myself. So I would go to a webinar knowing 100% I'm not investing, even though it was a good deal, right? I
Right.
knew that because I wanted to make sure that I knew everything I could know before I handed someone some money over. And not just someone, but someone I trusted. So I think that the education piece for me is extremely important. Sounds like for you and your W-2, but then also the real estate company is very important as well. And I think a lot of people, that traditional, non-traditional route, a lot of people, everyone's looking for financial stability, right?
Mm-hmm.
But when you go to them and say, hey, we do real estate syndication. Oh, I don't want to be a landlord. No, don't know anything. I don't want to fix and flip. The TV has made that sexy, fix and flip. What we do isn't really sexy, but it's not going to get you rich quick overnight, right? You're not going to
Right.
be able to
Yeah.
retire tomorrow. But it is proven that you invest, you reinvest, you reinvest, that you don't have to be 65, 70 and retire, or you don't have to wait until 65, 70 to retire. You will have that financial stability. You will have some income with, we like you underwrite for 5 years, but the reality is you guys are really going full cycle in, anywhere from 2 to 4 years.
Yes.
And so investors get their money back the same, usually very similar returns as the 5-year, but the business plan is just compressed. The returns aren't. The business plan is the
Yes.
timeline.
Yep.
And so, you just reinvest and reinvest. And so I know you would be glad to talk to people about kind of your aha moments and what got you into it, because you had told me that previously when we first met. And so anyway, Stephen, I know you'd be a great resource for anyone to reach out to. All right. So as we get to the closing, love to talk about maybe a book that stands out to you. Can be real estate, self-help, business, anything that stands out.
The most recent book I read is Ed Milet, The Power of One More, I believe is the title. A lot of it is about mindset.
Yeah.
And what, and I mentioned this before, but one of the things I've learned is, life is more about the journey
Yeah.
than the destination.
Yeah.
And I love the framework that this book helps you with, because in all aspects of life, right, you're one decision away from a little bit more happiness, a little bit more fulfillment. But we wake up every day, we make a decision, right? Am I going to do the same crazy thing I did yesterday, or am I going to do something different because I want to have a little bit different life?
Yeah.
And it's just one decision. It's one decision away. Like, and everything is really just one decision away. And so that's probably been the most powerful book that I've read recently. I do believe in reading a lot. I have Audible, so
Yeah.
any opportunity I've got, I'm listening to Audible, whether it's in the morning during the exercise or going for a walk. I'm big on helping your brain grow, nourishing your brain.
Yeah.
But that book in particular is probably the one that has stood out for me the most, just because of it's simple. Break it down. It's just one decision, and if you keep doing that one decision over and over, you get new habits, and new habits lead to a little bit more happiness in your life.
That's awesome. I got about 5 books that I need to start, but that's one of them. The Power of One More. So I'm excited to read that. I love
Yes.
mindset books.
Yes. Yeah, absolutely. Mindset. I really like the mindset books. I have to balance them between real estate or investing
Yeah.
and mindset. But I find that I'm also a big believer in meditation. So I'll have a daily, 10 minutes where it's just me and my thoughts and some meditation. But
Awesome.
it's mindset, man. You can go from I'm having a horrible day to I'm having a fantastic day with mindset.
Yeah.
And when you're down and out, or when things are tough, the mindset is where it's at, and what holds you back, it's your mindset.
Yeah.
So those types of books, Ed Milet, other types of books like that, I really enjoy reading. That one's been a fantastic one.
That's awesome. I know we kind of touched on this a little bit earlier, but what can people expect to see from you in your business in the next few years?
We're highly focused on growth. As of the moment of this recording, the market's kind of frozen.
Yeah.
And there's just not a lot of transactions. Speaking with lenders, you and I are both part of an investment group, and there's just not a lot of transactions right now. The things are very unstable. Now, what's great about it is, while the stock market is all over the place, I don't lose sleep at night with my real estate investments because they're not all over the place, right?
Yeah.
People still show up, people still pay rent. I'm invested in places where there's high, business growth and population growth and job growth, despite whatever's going on in the nation. So got that stability there. But while things have slowed down from a transaction standpoint, we're sharpening the saw. We are highly focused on our processes, refining those, improving those, making those repeatable. I'll go back to scalability, because things are going to shift. And when they do, we want to be in front of that situation and not caught on our back foot. So what I hope when we do another podcast in a few years, or maybe sooner, is that those targets I gave you, $250 million to $500 million, we move that a little bit, right? But we've got to be realistic. But a lot of it, I think, probably also making sure that our presence is known, right? Highly focused on education. We want people to be aware of this opportunity. So expect to see our name become, more well known, along with as many opportunities as we can provide investors over the next several years.
Awesome. How can people reach you?
The best thing to do, you look me up, Stephen Lee Thomas. Name's not very popular. You will find me. Google me. You'll find me. You can reach out to me. Facebook, LinkedIn. But I'll tell you what, I'm going to provide a link that you can share with people, and that's going to be a direct link to my calendar.
Okay.
And that's probably going to be the best way for people. They want to have a conversation with me.
Yeah.
Just schedule time. We'll do a virtual coffee. We'll hang out. We'll get to know each other. I'll answer whatever questions you've got. And we'll just sit down and have a good conversation.
Yeah, send that to me and I'll put that in the show notes. And then same thing with social media handles. I'll put those in the show notes, but where's the best place, or where are the best places to see you on there?
Best places to see me right now is going to be Facebook, LinkedIn. I'm not real big into TikTok just because I don't dance a whole lot. I think that's what you see on TikTok, some of those channels. We're working on growing our social media presence, but that's going to be the best place to find me. Social
Okay.
media.
Are you going to start taking dance classes to open up a TikTok or no?
Well, my little girl loves to dance.
There you go.
She's almost 5, and so she likes to watch those videos. So we dance. We've got Just Dance, right? So
Oh,
so
awesome.
maybe I'll take some of those Just Dance moves, put them on some TikTok.
There
And
you
you can
go.
find me there. Yes.
All right. And what's the best website for you?
Best website for us to learn more about our organization is sustainablecapitalinvestments.com. Just like it's spelled, it's a little bit long, but that's what we represent, Sustainable Capital Investments.
Awesome. Stephen, man, thank you so much. It's always great to talk to you. You had a huge impact on me personally when I was just getting started in this business. So I encourage anyone that has questions, feel free to reach out to Stephen. You can reach out to me and I can put you in touch with him. He's a phenomenal guy, knows what he's doing both in the professional world and in the real estate world. Thank you so much for being here and sharing your story.
Absolutely. Thank you so much for having me on. It was a pleasure speaking with you as always, and I'd be happy to connect with any of your listeners and help them out in any way that I can. Really
Awesome.
appreciate the time. Thank you so much, Charlie.
Yeah, absolutely. Have a good day. Thank you for listening to today's show, brought to you by H&K Investment Group, your home for passive investing. If you want to learn more about how you can invest with us, please check out our website at hkigllc.com. Don't forget to like this episode and subscribe to our podcast. Please leave us a review to let us know how we are doing. Feel free to connect with me directly on LinkedIn or Facebook. As always, I'm your host, Charlie Hardage. Catch you next time.